Well, it's been a spectacular day on Australian share markets. A 5% fall was transformed by a rally which ended with the ASX 200 closing 1.2% higher and the dollar recovering from a fall against the greenback. All eyes will now turn to the US Federal Reserve, which will decide early tomorrow Australian time whether it will launch another stimulus package for the beleaguered American economy. Hamish Fitzsimmons reports.
1 minute it's a crash.
The market at the moment is just totally gripped by fear.
The next, a rally. Australian stocks fell 5% but staged an equally pointed turnaround. The ASX 200 index closed 1.2% higher at 4,035.
That volatility is always an expression of strong differences of opinion in the market. You know, I guess that's obvious, but it does mean that the market is highly polarised and that there's there's a wide gulf between the two groups, those who are feeling bullish and those who are feeling bearish.
In Asia, markets improved slightly after heavy early losses. The federal government says the ongoing global turmoil is bound to have an impact on Australia's push to return to budget surplus by 2012.
There's no doubt that events in international markets do have an impact on revenue, for example, do have an impact on the budget. But we are committed. Well, we are committed to returning to surplus, but there's no doubt that events in global markets have had an impact on budget revenues over time and made that job that much harder.
Speculation about an official interest rate cut in September gained momentum, and several banks cut their fixed lending rates. The dollar fell below parity with the greenback, but recovered later. The drop in the local currency's value is good news for some Australian businesses.
Especially Australian exporters will appreciate it. All the service industries that are suffering so badly under the high Australian dollar and that are such an expression of the two-speed economy in Australia, they will feel some relief.
And there was some advice for investors, especially people worried about their super.
Making decisions in a period of extreme turbulence like this is generally a bad thing. So unfortunately they're just going to have to batten down the hatches and wait for the dust to settle.
On Wall Street, there's hope that bargain hunters will start to turn things around.
I think you'll see probably buyers come in because by that point they'll be down 2,000 points in 2 weeks. That's a big drop. So I think people will come in and start buying.
The greatest speculation on international markets is that the US Federal Reserve will intervene with a third round of bank asset buying called quantitative easing to stem any slide into recession.
The central banks worldwide are the last lender of resort. I guess it's a wonderful and tremendous important role. I guess in this environment, central banks have to be the last supporter for the whole markets.
The market looks at that and thinks if Ben Bernanke injects another $1 trillion through QE3, that's going to drive stock prices up, especially in US dollars.
We'll know if that's going to happen very soon. Hamish Fitzsimmons, Lateline.